makers and market movers. This is The Pulse with Francine Lacqua.
So more than 200 candidates have withdrawn from a three-way runoff ahead of France's second-round election on Sunday. Well, this as other parties seek to avoid splitting the vote against the far-right National Rally. Let's get more from Bloomberg. Caroline Conan now. Caroline, how have the parties been maneuvering ahead of the runoff?
There's been a lot of political bargaining over the past few days, and as you were mentioning, in two-thirds of this three-way contest that was supposed to happen in the runoff, you have candidates who came third, who actually decided to pull out, to withdraw from the race in order to block the National Rally from gaining an outright majority. That's what we used to call the Republican Front. That's what happened, for example, in 2017, in 2022, when you had President Macron facing Marine Le Pen in the presidential elections. We'll see what that creates. There was one poll showing that the National Rally could still get an outright majority, but now the markets have been calming down and are saying that this scenario actually is a bit more remote right now. Now the question is, if the National Rally gets, for example, 260 seats and is just 15 or 20 lawmakers away from an outright majority, is Jordan Bardella becoming prime minister? Before the first round, he was saying no, only if I become if I get an outright majority. Now Marine Le Pen is saying that perhaps they will try to grab 15 or 20 lawmakers from other parties, perhaps from the Republicans, and still take the role of prime minister.
All right, Caroline, thank you so much. Caroline Conan there with the very latest on the French election. Of course, the second round of legislatives is on Sunday. Now let's get more from Freya Beamish, chief economist at TS Lombard, and Bloomberg's Justina Lee. So thank you both for joining us. Justina, let's kick off with you. I mean, the markets have been quite volatile. Is there an expectation that markets then kind of temper down once we actually have the result?
Yeah, and I think it kind of depends on what the results are. I mean, as the way it looks, it seems like people would be in for a shock if kind of Le Pen kind of does better than expected at this stage. And I think anyhow, it's still the case that, you know, markets want a hung parliament, but kind of things are not going to be the same as what it was. And I think that's what you're seeing in the markets, and that kind of has implications for European markets as a whole.
Freya, what's your take right now on the French elections? It seems that half the people we speak to, and a lot of them won't actually go on the record, but half of the people are worried about, you know, protests of people not working, going to the streets, if there was a far right in power, and others are worried about fiscal spending. Which one is it?
In terms of the immediate market reaction, we have to think about whether there's a hung parliament or not. I'm not convinced that markets have got it right with regards to the implications of that. In terms of the wider context, it is very threatening to have this type of a party at the heart of Europe. That is obviously much harder to price in the immediate future. So I'll focus on that immediate reaction, which I think markets did go through a little bit of a relief rally, which under normal circumstances makes complete sense. You don't want politicians to be able to just do whatever they want. I think in the context of Europe, it's a little bit more complicated in the sense that for the ECB to feel confident, for the ECB to really kind of be that backstop that it needs to be, use the TPI, calm down repo markets, use the blueprint of the Bank of England in the Truss Kwarteng debacle in the gilts crisis. For the ECB to do that, it's a lot easier if there's a clear majority, in the sense that a majority would actually be able to work with the European Commission under the excessive deficit procedure and sign a deal. Until you have that kind of clarity, there is more of a question mark on what the ECB can do. I think when push comes to shove, the ECB probably would move in unless anything massively egregious is being said. But at the moment, it seems as though Rassemblement National is taking a leaf out of Meloni's book, looking at the Italian blueprint, in the sense that they seem to think that markets are a big enough stick for them to be sensible.
But Freya,
and when
you also argue. Yeah, you also argue that actually the repricing of the fiscal policy, I guess, in France is probably long overdue. So does it mean, you know, what does it mean for your take on other European countries? Do we need to look at the fiscal complex and say, look, given the rules that we have here, this is where they should be?
Yeah, I think in terms of the broader European fiscal effort, I still have some confidence that that we can make some progress there, particularly it benefiting France and Germany and Italy, as it happens, in the sense of moving more towards a wider funding of defense spending, of energy security, and those big countries actually benefit from that, as opposed to what happened in the NGU, where it was more to do with kind of economic underperformance, and so those countries didn't benefit as much. So that's the kind of the positive there. Specifically with regards to France, I'm more worried about debt sustainability there because it can't be a high-pressure economy. I like high-pressure economies such as the US, such as the UK with regards to debt sustainability, because I think that keeps debt ratios at bay. But because France has such a high private debt ratio, it's hard for the economy really to sustain strong growth after amid high interest rates. And so your debt sustainability, your debt ratios is more of a question with regards to the government debt ratio.
Justina, we were also in Sintra, Portugal, yesterday trying to speak to ECB officials. And I asked, of course, the chief economist and others about whether the ECB would intervene, whether if the spread between Germany and France widened further. I mean, do you think at some point they could intervene?
Oh, wow. I mean, I've got to dodge that question here. And you can kind of see that it's been kind of a pretty political kind of debate as well, with SocGen actually kind of weighing in yesterday because, earlier the German minister kind of tried to argue against that. And so I think, the mechanism is there. And I think, but it's going to be a pretty unprecedented use, given that I don't think anyone kind of ever thought this could be kind of applied to French bonds.
We also heard from Jay Powell yesterday, Justina, and we're looking at a lot of, the S&P 500, for example, ending above 5,500 for the first time in its history. What's supporting these equities in the U.S.?
Yeah, it's kind of funny. I think equities are still kind of enjoying this Goldilocks, where when they see a bit of bad news from the economy, it's not too bad, and they can kind of enjoy the rate cut narrative. And that's kind of what Jerome Powell kind of delivered yesterday. I mean, he really acknowledged the progress that we've made on the disinflation front. But I think it's interesting that he also said, we can take the time to get this right. And I think that just shows he wants to see more evidence that inflation is indeed cooling. And he thinks there's no time to panic because the job market is still looking pretty healthy.
Yeah, here's Jay Powell.
We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. Frankly, because the U.S. economy is strong and the labor market is strong, we have the ability to take our time and get this right. And that's what we're planning to do.
So, Freya, when you look at what we heard from, not only Christine Lagarde, but Jay Powell there, for me, it felt like they were saying actually higher for longer. So we've made progress, but we don't really know what the inflation complex looks like. How did you interpret those comments?
Yeah, I think there's something to that, but I think they also will probably see in the data that the inflation is moving in the direction that they want. There's a couple of things that are going in the wrong direction. Shipping costs have picked up again, and that feeds through to some extent, but it doesn't feed through to any great extent, particularly in the European case. In the US case, maybe there's a little bit more argument for that. But I think the broad trajectory continues to be towards something manageable. Let's say in the US, 3% and below. In Europe, probably undershooting the target. So Europe can afford to move much more quickly here, and probably should have moved much more quickly already. And I think what we'll see in the US case is that inflation will come down to a rate that is seen as manageable and within range of the target. And perhaps actually when we look at the jobs report, I'm not saying specifically about Friday's jobs report, but over the next kind of few months or so, I would say probably downside surprises is what's underpriced, in the sense that people stuck their neck out last year with regards to the recession call, and it didn't come through. And we do still see some kind of evidence of slowing in the US jobs market there that could come through over the next few months. So I think by September there is going to be a clear signal that the Fed can cut as well.
Freya, I mean, tomorrow's UK election, of course, here in the UK, and a lot of the focus will be on, it looks like Labour has it, if you look at the polls, by a landslide, but then they have a huge fiscal cliff. I mean, there's huge concerns about how they fund some of their policies. What's your take on the UK?
Yeah, if we take a really narrow, kind of sensible economists are just glorified accountants approach, then we should be thinking, oh, well, how are they going to make their pledges? Or they haven't pledged a great deal. There's a lot that's still left to question, which I think is a good thing at this stage in the game. How are they going to make their kind of pledges stack up? Are they going to cut spending or are they going to raise taxes? They've left themselves a little bit of wiggle room with regards to kind of capital gains tax, but my bet is actually that growth does come through to some degree. And that's, again, because the UK is a higher pressure economy. There's a tight labour market. And I think the lesson of the 2010s is that when there's no pressure, then you don't get productivity growth. And I think the broader lesson of history is that when you have a tight labour market and you have an ability of businesses to respond to that in a world that is not hyper-globalized, i.e. they won't just offshore, that they will start to invest domestically, and that will help capex growth, and that will help productivity growth. So I think that helps them out. I think the Labour Party probably, even though it has tied itself down to a frankly ridiculous fiscal rule with regards to the 5-year outlook, it can probably shift the culture around how those fiscal rules operate. If you read between the lines of the May's lecture, for instance.
Justina, how are you expecting markets to behave on the back of the election? I mean, it seems that a lot of it is probably already priced in.
Yeah, I mean, I think generally people are not expecting much of a reaction. I mean, partly because this is a center-left kind of government who doesn't have a lot of fiscal room to do anything bold anyway. But I think if you kind of look beneath the surface, I mean, a lot of strategists have talked about, the impact on home builders, for instance. I mean, Labour has talked about, easing planning restrictions. There might be an impact on, like, the takeover of Royal Mail's owner, more specifically. Or kind of maybe people will just be happy to kind of have a bit of stability and maybe a government that is a bit more friendly toward Europe and kind of wants to get a better kind of trade deal with Europe. And I think we have heard some positive noise that, at the very least, the UK is now looking like an island of stability in Europe. You're hearing that a lot. And we haven't heard that for a while now. So.
We'll take that, an island of stability. Thank you so much, Justina and Freya. Freya Beamish, chief economist at TS Lombard, and Bloomberg's Justina Lee. Now, coming up, the Finnish president, Alexander Stubb, says China could solve the war in Ukraine with just one phone call. He spoke exclusively to Bloomberg, and we'll bring you that conversation next. This is Bloomberg. The Finnish president, Alexander Stubb, says China should do the right thing and help broker peace in Ukraine. While speaking exclusively to Bloomberg, he said that Russia is so dependent on Beijing that President Xi could solve the crisis with just one phone call.
In the beginning of the war, I think China was sitting on the fence. It was sort of looking around, trying to understand what was happening and why Putin was doing it and what the ramifications are for itself. But as time has progressed, and we're now almost 2.5 years into the war, China has started to provide Russia with different types of aid, not direct military aid, but issues linked to energy, sometimes even dual use of goods. I argue that Russia is so dependent on China right now that one phone call from President Xi Jinping would solve this crisis. If he were to say, time to start negotiating peace, Russia would be forced to do that. They would have no other choice.
How likely do you think that that phone call would be made?
I don't know, but I call upon China to do that. If China is genuinely interested in peace, if China is genuinely interested in harmonious relations between nation states, it cannot allow a country like Russia to drive an imperial, at the end of the day, aggressive and colonial war against a independent nation state. It needs to protect the international rules which are linked to territorial integrity and sovereignty. That is the right thing to do, and that would also show leadership from China. And I think it would get a lot of goodwill, not only from the global south, but also from most countries in the global west, were it to be taking a stronger role in ending this war.
Well, that was the Finnish President Alexander Stubb speaking exclusively to Bloomberg. Now, the U.S. ambassador to NATO says there are concerns over deepening ties between China and Russia. In another exclusive interview, Julianne Smith told us NATO is working to expose China's efforts to support Putin's war in Ukraine.
China takes every effort, every chance it can get to argue that somehow it's a neutral player in this war in Ukraine. But in reality, the PRC is providing a long list of dual-use components, things like machine tools and microelectronics that are enabling Russia to pursue this war of aggression in Ukraine.
Well, coming up, Tesla beats estimates with a less drastic drop in EV sales, sending shares soaring. We'll bring you details next, and this is Bloomberg. Well, Tesla has extended recent gains as deliveries for the second quarter were better than expected, than analysts were expecting. Well, joining us for more is Bloomberg's Craig Trudell, our autos czar. I love saying that. Now, Tesla stock jumping some 10% yesterday on these numbers. I mean, it's pretty remarkable. What made it?
Yeah, I mean, we're talking about a few thousand vehicles. You know, the expectation going into the print was a roughly 5.8% decline. Instead, they dropped by 4.8%. So, you know, definitely a clear beat here. But, you know, the number is still down. And this consensus, by the way, it had kind of dropped like a stone. It was 565,000 a year ago, and it had dropped to around 440,000. So, you know, we're talking about, you know, clearing a much lower bar. And yet this company added the equivalent of Porsche's market cap in a single day.
I mean, that's crazy. When you look at where they sold, I mean, I think some of the retail sales in China maybe did better than the U.S., but also they went to new markets. And so is this really a good template of what earnings look like?
Yeah, I mean, I think, you know, in terms of looking ahead to earnings, you know, the energy storage deployments that were mentioned in yesterday's release maybe helps with that revenue, with sort of padding the fact that they're giving up some on the automotive side. But when you look at their segmentation of revenue, you know, they really just break it down by automotive, energy storage, and then services and other. Over the last few years, they've made more on you know, services for cars and merchandise and that sort of thing than they have on energy storage in terms of revenue. So, you know, just how much the energy storage business really starting to get momentum will offset the slippage in automotive, I think, is a real open question. And so the general sort of assumption is that revenue and earnings will continue to trend lower as a result of these numbers.
Craig, the Cybertruck. Where are we on the Cybertruck?
We still don't even have a breakout of Cybertruck within how they report their quarterly production and deliveries. It just gets thrown in with other models. So this is still kind of a two-trick pony. We still have a Model 3 and a Model Y really doing the heavy lifting, and, you know, only around 20,000 units between the Cybertruck, Model S, and Model X. So I think some people are starting to wonder, you know, how much longer, you know, are Model S and Model X going to be around, given the fact that the two of those plus the Cybertruck, the volumes are so low at this point.
So interesting, Craig. Thank you so much, as always, our Craig Trudell. Now, on to some news involving the pharmaceutical sector now. And Sanofi's Dupixent has won clearance from European patients with a chronic lung disorder, creating another avenue of growth for the blockbuster drug. Now, shares in Novo Nordisk fell after the U.S. President Joe Biden continued his push for cheaper medicines by demanding the price cuts on their weight loss and diabetes drugs, Ozempic and Wegovy. Meanwhile, there was mixed news for Eli Lilly. Its new Alzheimer drug received FDA approval in the U.S. Shares fell yesterday off the back of that push by President Biden to lower the cost of obesity drugs. Coming up on Bloomberg UK, we bring you the latest numbers from the polls and bookmakers on the last day of the election campaign. That's next, and this is Bloomberg.